Hi guys, I have crypto portfolio of $10,000 and this is a monthly series where I show what I invest this money in, what actions I take in the market and how I aim to turn it into several $100,000 over time. The previous video was back in October and since then I have been waiting for better entry points and haven't been buying altcoins. For several months I have been saying that I expected Bitcoin to fall from around $100,000 into $60,000 range, and that's exactly how it played out. Now the time has finally come to do that. Let's take a look at the current state of the portfolio. Last time we invested $2,800 and $7,200 remained in stablecoins. Those purchases were made in the last days of September, unfortunately right before the flash crash, which was painful. As of now, the portfolio is down 16%, while 72% of the portfolio is still in stablecoins. At the moment, the portfolio contains only 3 altcoins. My strategy is not to spread capital across too many altcoins because focus gets lost and the probability of mistakes increases. The largest position in the portfolio is Ethereum Classic. My average entry price is $18 and currently the position is down roughly 52%. If you want detailed explanation of why I'm betting on Ethereum Classic, check the previous video. But briefly, if you look at the chart, it looks very similar to the other coins that performed well this cycle. This cycle showed that coins like XRP, AVAX, XLM, HBAR and others pumped after trading in clear price ranges for a long time without making new lows. This usually indicates that the team is supporting the token, not letting the price bleed endlessly lower and not selling tokens every month to pay salaries. That's exactly what we see with Ethereum Classic. From the 2024 highs, the price is down about 70%, unpleasant, but not like many other altcoins that dropped around 90–95%. Most importantly, Ethereum Classic is still trading within a long-term 4-year range of $12–40. Even so, we briefly broke below it. Ethereum Classic is essentially the original Ethereum before the fork and it has an institutional grade team behind it. This is not a project created overnight with a quick token launch and micro pump and dump to zero. Another very important factor for me is that no influencers are talking about buying Ethereum Classic, no one is shilling it. That means there are no excess passengers in this coin, making it much easier for the team to eventually move the price. As I mentioned back in October, a downside sweep below a 4-year range is a very common move to shake out remaining holders. When the price was around $18, I expected a move into the $7–10 range, which is exactly where we are trading now. That's why I kept most of the portfolio in stablecoins to be able to average in these levels. Originally, I wanted Ethereum Classic to make up no more than 30% of the portfolio. That's why this month we are buying it for $1,000, which is 10% of the total portfolio. Let's go to the exchange and buy $1,000 worth of Ethereum Classic. That gives us around 115 Ethereum Classic. Right away we will add this transaction to our portfolio tracker. If the price drops further into the $4–5 range, we will buy another $1,000 there. For now, that's enough. The next coin in the portfolio is Filecoin. It's currently down about 55% and I don't see a reason to average it yet. I plan to add more only if the drawdown reaches 60–70%. I don't want Filecoin to take up more than 15% of the portfolio for diversification purposes. But I still believe in the project. The worst performing asset in the portfolio so far is SUI-NS, the main project on SUI. We bought it near the lower range when the market cap was around $20 million. Apparently the project is doing very poorly because its market cap has dropped to about $5 million. I originally planned to average in if it fell 50-60%, but it's now down around 85%, and I'm not going to average aggressively. I'm stepping away from the original plan here. You have to stay flexible, not emotionally attached to one idea. Otherwise, the crypto market will wipe you out very quickly. This position was only about 3% of the portfolio, so it's unpleasant but not critical. I see no point in selling because this token can easily be pumped 20-30x. With a $5 million market cap, it only takes a few $1,000,000 to move it significantly. That kind of capital can be found since this a pocket project of Mr. Labs, the company behind Sui. So instead of averaging heavily, I will make a symbolic buy of $50, about 0.5% of the portfolio, and see what happens next. For $50, we get around 2,500 tokens. Back in September, we spent $300 to get about 2,000 tokens. So even with this small amount, we have averaged down effectively and almost doubled the number of tokens. We are done with the older coins, and now it's time to add a new one to the portfolio. It's Verge. As this is a very old privacy coin similar to Zcash, which is exactly the type of setup we like, unlike the 3 coins already in the portfolio, which I'm holding long term. This one is more of a medium term speculative play. I actually bought it a couple of weeks ago just to stay engaged with the price action. If you follow my Telegram channel, I mentioned this buy there about 2 weeks ago and regularly share what I'm doing in the market and which project I'm working on, mostly in near real time. If we look at the chart, it's clearly not a typical altcoin structure. For the past 3.5 years, Verge has been trading in a very tight range, and more importantly in a ascending range between $0.0025 and $0.01. This tells me that the team is actively managing the price and not allowing the token to collapse so that it can be accumulated cheaply, which usually means there are plans to pump it later. While most altcoins are making new lows, Verge coin is trading near the upper boundary of its accumulation range and moving against the broader market. This strongly reminds me of Zcash. The pattern is almost identical. Before its pump, Zcash was also trading in an ascending range and consistently making higher lows. Even during the most recent sell-off a couple of weeks ago, when most altcoins went on to make new lows, Verge held up well and quickly bounced, forming a higher low. Because of that, I expect Verge to potentially move earlier than the rest of the market, possibly delivering a 15-20x move while the broader market is still going sideways or only slightly up. This is the classic Zcash type setup where green candles appear before the rest of the market wakes up. I bought Verge for $1,000 at an average price of $0.0069, which is exactly about 10% above the current price. If it drops to around $0.004, I will add another $1,000. After this purchase, we still have $5,150 in stable coins, meaning almost 50% of the portfolio remains in stables, which is a strong position to be in. I'm keeping those stables to potentially buy Ethereum in the $800-$1,200 range. As I mentioned in the first video, every month I add $500 to the portfolio from work or other income, and this time I'm not using that money to buy altcoins. Instead, I'm allocating it to airdrops as a form of diversification. The idea is simple. We allocate capital to projects before they have a token, earn points, and once the token launches, we receive an airdrop. Depending on the project, returns can range from 3x to 100x. A recent example is Lighter, where I made around 50-60x. This month my focus is on the 3 projects: Hibachi, Ethereum and Nado. These are Perp Dexes, and in about 95% of cases when a Perp Dex launches, it delivers returns in the 10-60x range relative to cost, just like Lighter. In maybe 5% of cases it fails like Voi, which gave nothing. From a risk-reward perspective, this setup makes sense for me. Even in the most conservative scenario, I expect around a 3x return on costs, and since I'm expecting a broader market recovery later this year, new projects should launch at higher valuations, which means even better upside on airdrops. Let's start with the alpha information. The Nada project is being built on the new Inc network, which is developed by the Kraken exchange. Kraken is launching its own layer 2, and on top of that they are building a Perp Dex exchange. The team has officially stated that Nado will not have its own token. Instead, there will be an airdrop in Kraken's exchange token Inc. During the AMA session, they said the token launch is expected in approximately 6 to 8 months. Let's calculate this mathematically. If we assume 8 months and the team announced that starting last week, the points emission will be kept at 950,000 points per week, that gives us around 30 million points. On top of that, during the previous alpha season, they distributed 8 million points, plus 3 million from the builder program, 2 million from the season activity, and let's add another 2 million for various bonus campaigns. That gives us a lot of approximately 45 million points by the time of TGE. Now we need to estimate the value of Kraken token and the airdrop percentage. Let's look at comparable centralized exchanges and their token market caps. Binance token BNB is over $100 billion. Crypto.com tokens Kronos is around $3 billion. BitGet's token is about $2 billion. OKX token is also around $2 billion. Kraken is comparable in scale and popularity to these exchanges. So using a $2 billion market cap as a base assumption is reasonable. Perp exchanges typically allocate between 10-30% of token to airdrops. In the most pessimistic scenario, with a $2 billion market cap and a 10% airdrop allocation, the point value would be around $4.5. Given current costs of around 80 cents per point, that's already solid. In a more realistic scenario with a $3 billion market cap and 20% airdrop allocation, the point value would be around $13, which is more than 15x on the costs. And this is not even an optimistic case. If the market turns bullish, the token's market cap at TGE could easily be $10 billion, which would put the point value at around $50. So what should you do and how should you farm the project? On the website it stated that limit orders have a 0.01% fee, while market orders have a 0.035% fee. That means for $1 million in trading volume, limit orders cost $100 and market orders cost $350. However, you also need to account for P&L during trading. You can't just open and close a position instantly with no risk. Perp farming generally means keeping total costs, including P&L, under $350 per $1 million in volume. A very good farming setup is spending around $100 per million in volume. Don't listen to people who claim the farm at zero cost or even in profit. That's mostly talk. My actual cost is around $220 per million in volume right now because I'm rushing to build volume. But on average it should be closer to $180. My strategy is to wait for a range, open limit orders near the lower boundary, and once filled, place a limit take profit slightly higher to cover the 0.01% fees. As you can see from my trades, my point cost comes out to around 80-90 cents per point. Recently I have also been testing a slightly different strategy, trading from the long side in a rising market using market orders. Overall, I'm conservatively expecting between 5x and 30x on the money I have spent here. At that moment I have 430 points and I'm in the top 3000 users. There are only about 15,000 wallets participating, so don't miss this opportunity. Also, I farm Hibachi and Ethereum the same way right now. The math there is also favorable. Ethereum is from the Ethena team. They created the first synthetic stablecoin, and they are generous when it comes to airdrops. I'm expecting 10-15x on the money spent there as well. There are still not many people, points are plentiful. The math is simple. If your cost per $1 million in volume is $300 or less, that's a good result. Because for every $1 million in volume with $300 in costs, I'm expecting 5-15x at TG. To generate $2 million in volume, I spent about $500. On Hibachi, farming points is very profitable, and behind it are two tier 1 funds, basically treated like their in-house project. So right now I'm focusing more on farming projects because it's a safer way to get exposure to the market, especially in the current environment. That's it for today. Thank you for watching and see you in the next one.